Lots of news this morning in the battle of control for Cadbury. Kraft is selling its US pizza unit to Nestle for $3.7 billion, raising cash to improve its offer for Cadbury. Meanwhile, Nestle says that it will not join any bid for Cadbury, dashing speculation that it could team up with Hershey to make a joint offer. John Cox of Kepler Capital Markets joins us now to sort this deal out. He comes to us live from our bureau in Zurich. Thanks so much for joining us. First off, John, of all these developments, which is the most important? Which changes the landscape here?
I think the most important thing really is Nestle ruling out getting involved in the Cadbury bid in any way. Now that basically leaves the field wide open for Kraft. Kraft has always been in the driving seat. Nestle has been seen as one of the dark horses potentially getting involved. Now the fact that Nestle said it's not involved just really does leave Kraft in the driving seat. Now the second part of it is obviously the fact they've sold their frozen pizza business to Nestle, raising $3.7 billion, and have said that instead of stock, they will put 60 pence more cash into a deal in exchange for the Kraft stock. So that may be enough to sweeten some of the shareholders in Cadbury to get on board. The deal at the moment, on my calculations, is worth about £7.42 per share. It's inching up slowly. The dollar appreciation is helping. Kraft stock has been relatively stable. Now I tend to think Kraft will have to go above £8 per share. Now today's deal, if you look into it, $3.7 billion would seem to be that they could actually do a lot more than 60 pence per share. I think they have the financing in place to probably add another pound cash, and that would probably be enough to get the deal done, to get approval for some of those long-only fund managers that are in Cadbury stock at the moment. But yes, certainly I think the main news, the most important point today, was Nestle saying it's not interested in bidding for Cadbury, leaving really Kraft really in the driving seat there.
So when could Kraft make that higher bid?
Obviously, under UK takeover laws, Kraft now has a couple of weeks to come back with a bid. It said today it will announce a number of shareholders have accepted its existing bid, I think tomorrow in the afternoon. So we'll get an idea of how many shareholders have already signed on. I presume it's going to be a very, very low number indeed. Now, I presume then over the next couple of weeks, Kraft may go back, do some more sums and come back with a better offer. I presume all they need to do is probably just add an extra pound to that deal and to get the deal done above £8 per share. And if you talk to most of the long-only fund managers in London, I think most of them want at least £8 per share. Now, the question mark is really, who are the share base at the moment in Cadbury stock? If it's mainly the risk-arb guys, then Cadbury could go for much lower because the risk-arb guys just want to see a deal done. Now, I still tend to think the long-only, more fundamental fund managers probably outweigh the risk-arb guys. As a result, it won't get done lower than £8 per share. But certainly, Nestle coming out today and saying it's not interested, it means that the pressure's off Kraft. It doesn't really need to force through a much higher bid. And I think the deal will be done somewhere above £8 per share.
All right, we look for that then. Thank you so much. I've been speaking with John Cox of Kepler Capital Markets, looking for a deal to be done at 80 pence a share.